how do you get the best money for your next business loan? Well, that's exactly what we're about to dive into right now during this training. We're going to talk about how you can get the most money at the best terms to be able to fund your business. We're going to dive into the individual risk factors that lenders really look at to determine things like how much you'll get approved for, what kind of term you'll get, what kind of interest rate and fees you'll pay. And then I'm going to give you individual insider tactics on every single one of those risk factors so you know little tweaks you can make and adjustments you can make to improve to get a lot more money at a lot better terms. Sounds pretty cool, right? So we've got a lot to cover. Let's dive in. So we talk about getting you the best money for your next business loan. Here's exactly what I mean. How do we get you the most amount of money at the absolute lowest payment? Let me give you an example. The very first loan I ever got from my business was $75,000 loan, and I paid $9,000 a month for it. Then my next loan that I got for the business was $325,000, and my payment was only $4,500 a month. So how do you get $250,000 more in financing and have a payment half as much? Well, that's exactly what I mean by the best money. Look, it all boils down to this. The goal is to get you the longest term and the lowest rate. That means you can borrow more money and have a lower payment. Now, the reality is having a longer term matters even more than having a lower rate. But the purpose of this training is to help you get a long term, to help you get a low rate, to help you pay little to no fees. And when we have that combination, that's what's going to get you the best money for your business loan, which is going to help you get more money at lower payments. So how do we do this? Well, let's talk about it. So it all really boils down to the actual risk factors that lenders use to assess the risk of the likelihood that you'll pay them back. The higher your risk, obviously, the higher your interest rate, the shorter your term, the higher your payment will be. So what are these risk factors that lenders look at? Well, there's several things. First of all, they're going to look at your credit. They're going to look at consumer and commercial credit quality. We're going to dive in. I'm going to give you some tips and tactics on what to fix there. They're also going to look at your cash flow, how you manage expenses as well. They're going to look at things like your collateral or the reserves you have. They're even going to look at things like the age of your business and the industry you're in. Look, there's a lot of factors that calculate your risk, but if I look at the most important ones that determine the types of terms you're actually going to get on the financing, those are the most important. So let's dive in and focus on them individually right now. Starting with credit. So there's two sides of credit that lenders are going to look at. The first is business credit. Now, by establishing business credit, you give yourself a way better chance of getting approved for financing, getting more money, and getting better terms. Look, business credit's as important to your business getting good terms and getting good money as it is for you to your consumer credit to do that as a consumer. Like if you want a credit card or a mortgage or a car loan, you know that you're going to be able to get more bang for your buck with good personal credit. The same thing applies in the business world. Like if you want to get the best business loans, the best credit lines, the best credit cards for your business, you need to have established business credit. It's looked at by most lenders, even lenders that just offer equipment financing. So you've got to establish business credit, and that's very important. A lot of times you can get financing and your terms are based just on business credit quality. So most credit lines, for example, offered by vendors, your terms are basically just based on the quality of the credit that your business has. So having good business credit opens up hundreds and hundreds of credit lines with really good terms. Now on the other side of this, we've got consumer credit, and consumer credit's used for a lot of financing as well, like longer term loans or SBA loans. As a matter of fact, if you really want to get the longest term financing, the financing that gets you the most money and the lowest payment, you need to have well-established personal and business credit. You have to focus on both. So for example, an SBA loan looks at both consumer and commercial credit. They calculate that into their FICO SBSS score, and that's what's used to determine how much you get and the rates and terms that you'll pay. So you should be working on improving your consumer credit. Look, the majority of items on your credit report aren't accurate, and the law says they have to be 100% accurate and verifiable and timely to even be on the report. So working on disputing things that don't meet that criteria yourself or hiring somebody to do that is a good solution to help you improve consumer credit. And at the same time, work on establishing your business credit, building it, growing it, and also keep an eye on it, monitor it, because that business credit is very important to helping you get the most money at the best terms. Now, next, we're going to dive into cash flow. So there are a couple things we're looking at here. We're looking for basically just your cash flow management. Yeah, expenses tie into that. But most importantly, what lenders really want to see is they want to see how do you manage your cash flow regularly. That's why most financing out there that takes your cash flow into account is going to ask you things for like your bank statements, because your bank statements reflect like how you actually are managing your cash flow. How much money do you have coming in versus going out of the account? How much money do you have left over at the end of each month? Do you have a lot of non sufficient funds? Are you having overdrawing the account? These kind of factors are things that lenders aggressively look at to determine how well you're managing the cash flow of your business. So some things to do here. First of all, make sure you manage your cash flow wisely. Have more money going in your bank account than going out. Have a lot of transactions happening monthly that are going into your bank account versus just a few. Make sure that you have as much money as possible at the end of the month in your bank account. That ties into scores like your bank rating. The higher your bank rating is, the more likely you are to get money from any institutional bank like Chase or Bank of America. So make sure that you're managing that bank account properly. Have a lot more money going in than coming out. All these factors combined show responsible cash flow management. At the same time, you should have a merchant account. You should be accepting Visa card, MasterCard, American Express, Discover credit cards. And on top of that, you should make sure that you take good care of your customers so you don't have a lot of chargebacks. A lot of lending is available just based on how you manage your merchant account. So by managing your bank account and your merchant account responsibly, that alone is going to help you tap into a lot of financing and get the best terms on that financing when you go to actually secure it. Now, the other thing to keep in mind when it comes to cash flow and expenses is your tax returns. Man, so many business owners mess this up. And what I mean by that is that you show me a business that has $1,000 in profit versus a business that has $1,000 loss, and I'll show you the difference between a really good loan and a really bad loan. Lenders want to see that you're running a profitable business, and that's kind of the catch-22 for us as business owners. We try to write off as much as possible to pay as little in taxes as we possibly can. Smart. But the problem is when it comes to getting money, we're also showing lenders that our business isn't doing very well, that it's not making money, it's even losing money in some cases. So we have to be aware of that. And we want to make sure that we have tax returns that show some kind of profit. We want our tax returns to show that our revenue is increasing. Our bank statements want to show the same thing. So when lenders see this, they see signs of a healthy business. They see revenue increasing, they see profits, they see more money going in the bank than coming out, and all of those kind of things show responsible cash flow management, and that's the key to getting the most money at the best terms for your business. Now, another aspect of getting the best money comes down to collateral. It comes down to what assets you may have to offset the lender's risk. So if you think about it, if a lender gives you $100,000, for example, and there's no collateral, it's unsecured, well, if you default on $100,000, they're just out that money. They're never gonna get that money back. But if you secure it with some kind of collateral that they can take back in case of your default, maybe they only sell that collateral for $50,000, but they at least recoup 50% of what they lent pretty quickly. So that's what they're looking for, is they're looking for assets that they could quickly sell through a fire sale to get back part of or everything they lose. As a matter of fact, SBA loans want to have as much collateral as what you're actually borrowing. So if I'm borrowing $1 million, they want to see that I have $1 million in collateral, for example, because again, even if you default, then they have these assets they could take back and sell through a fire sale and get part of what they lost. So any kind of loan you get is going to be better if you have some kind of collateral. And the good news is there's collateral-based loans that will give you really good interest rates and low terms just based on you having collateral. Your credit doesn't matter. Your cash flow doesn't matter. Nothing matters just other than the fact that you have collateral. So stocks, bonds, 401ks, IRAs, any kind of residential or commercial real estate, vehicles that you actually have, equipment, inventory, even a book of business if you're an insurance company, all of these things can be pledged as assets, but the most popular one that is used for SBA loans is just account receivables, meaning you let your customers pay you over time or on terms. That alone creates account receivable, and those account receivables, as they grow and build, are one of the best forms of collateral you can use to collateralize future business loans. So remember, having assets that can serve as a collateral is another important factor in getting you the best money when it comes to business loans. Another important aspect of you getting the best money on your next business loan is having a business plan. Look, a lot of financing out there doesn't require a business plan. You can use credit line hybrid that just looks at your personal credit quality. You can look at any kind of asset or collateral-based lending. You can look at revenue financing or merchant cash advances that just look at your revenue, and none of those need or even want to see a business plan. But if you want the best money, if you want the longest term, the lowest interest rate, the term loans, the SBA loans, you're gonna need a business plan. They're gonna wanna see you know things like the market size that you're actually servicing, what the problem is you're solving, how you're gonna solve that problem, your competition, what differentiates you from your competition, what's your marketing strategy, what are your projected financials. A business plan gives you you all this. And let's be honest, it just helps you run your business if you have a business plan to begin with. But when it comes to getting the best loans, they're all going to want to see this. They're going to want to see that you have a business plan mapping all of these things out. As a matter of fact, if you have that business plan, it is a good business plan, then it's a good idea to supply that with any kind of financing you go to get, even if it's not required. So having a business plan is key to getting the best terms on any kind of financing you're getting for your business. And the final point of getting the best money on your next business loan is finding the right loan program and the right lender for you. Look, the reality is there are thousands and thousands and thousands of lenders out there that offer hundreds of different loan programs. And if you don't know exactly which one works for you program-wise, and then find the exact best lender that offers it, then you're missing out. So let us help you along the way. Credit Suite will help you 100% at no cost, matching the right loan program and the right lender. As a matter of fact, we'll get you better pricing than you get on your own because we do so much funding volume with these lenders, they give us big discounts and we pass that on to you. So we can help you find the right loan program and the right lender. You can easily match up with us two ways. You can go to creditsuite.com/get funding right now. creditsuite.com/get funding. Fill out a really short questionnaire, and then our funding team will be on the phone with you talking about all the money you can get shortly thereafter. The second thing is go meet with our actual account executives. creditsuite.com/consult. If you go to creditsuite.com/consult, you can schedule a finance assessment. Our team will look at fundability factors and tell you what you need to improve to have a better chance of getting approved for financing. We'll talk to you about all the financing you can get now, and we'll even give you tips and tactics to build your business credit, all at no cost. So make sure you register for that free consultation. So hope you got value from this training. If you did, make sure you like and subscribe to keep your eye out for our next training, where we talk about more cool ways to get the money you need to start and grow your business.